why don't you kick it off? Explain what RSI is, why it matters, what it means, and why we use it.
Absolutely. So yeah, so there's multiple ways to use it, but I'm pulling it up here, right? And this is the relative strength index, right? So this is an oscillator that basically oscillates between 0 to 100 and back and forth here. There's a few, there's some advanced ways to kind of like dive into this, but I'll just go with the very like basic. Like anybody can kind of take this and put it in their TA toolkit. Essentially, you got some levels here. This kind of, like I said, it goes from between 0 to 100. You very rarely see 0, and I don't think I've ever seen physically 0, and I've never really seen 100, but it's possible. But then there's obviously a middle line that's right here. It's kind of dotted, as you can see, and it's 50 right in the middle there. At the bottom here, you can see 30 is kind of highlighted and 70 is highlighted. So essentially, when you're looking at anything, and this goes into stocks, whatever, the asset you're looking at, you want it to be, especially if you're bullish on it, or if you're going long or anything like that, you're in bullish territory basically above 50, and you're in bearish territory essentially below 50, right? So this is where you can kind of see, you can see it rising, but then we can hit our head on the 50 and continue just kind of dropping, vice versa. Right now, like for Bitcoin, for example, we came up, and I'll get into overbought and oversold in just a second, but we came back down and we bounced right here. This is a daily time frame too, so this is a major component to kind of look at. You can zoom into 1 hours and 4 hours, to kind of nail smaller time frame moves. This is a larger time frame here, so this is a macro picture, so to speak, and you came down and you got a bounce right here at a 52. So, you're still kind of continuing higher, although we're still, rolling to the downside here. You'll want to really keep this 50, as your base for the daily time, for these larger time frames here. Now, when you see this 30 and 70, this is a way to measure if something is overbought, which is at the highest level here. So that means that basically you're running out of buyers up here, right? You're running out of steam.
Okay.
So the sellers are basically going to start taking over. And then when you run down to this level, you're oversold, right? So you're about to run out of sellers basically, right? So then the strength kind of picks back up, goes from there. Like I said, this is on a daily time frame here. So one big key element to the RSI too, not just to when you're in between here, it's not cut and dry as to say like, okay, right now we're above 50. So we're golden. We're just going to head higher, right? You're going to need to see the price action kind of start picking up. But right now, if we were to start picking up pretty heavily, because we are at a 50, we have plenty of room to the upside. If you start seeing the price action picking up and you're up in this level, this was 78, almost 80. We're way overbought at this point. You know that you're kind of in a danger zone at this point. It can remain up here for a bit, right? As you see right here, we came up and we still had a little bit more upside to go through. But you really want to be paying attention to when you get to this level, because you're kind of in like a red zone, right? Now,
let me ask you something real quick. I don't mean to cut you off, but somebody mentioned in the chat, they said, hey, this looks literally, the RSI looks identical to the price action. So my question is this a what someone would consider a lagging indicator, or is that because it literally looks like it is almost mimicking the price action? So would this be considered a lagging indicator? Is this pretty typical, or is this just what it's been here recently? What's that look like?
Everything, all these indicators are technically lagging, right? So, but yeah, so it's slightly lagging, but it's pretty much mimicking the price action as well. But like I said, as you can see, when you get to this level, basically above 70, you can expect a reversal at some point in the near future, and then that's what you do get. Now, one thing, like now that person pointed that out, the one really key thing you can use with the RSI is divergence, right? So this is like back here in May. You can tell that the RSI does not look like the price action, right? Because we were heading higher right here, right? You got all these top, high, while you actually, even if you drag this all the way down to here, and then from this level, you had all this, right? We were going lower. So this is known as bearish divergence, right? So this is kind of indicating that there's underlying weakness in the price action, and then we're probably going to see a reversal at some time. Doesn't mean it's going to happen tomorrow, right? Like if you would have saw this back in, this is a really large time frame. So if you would have saw this here, this was like March, and this didn't actually come into effect until like a month later. So this works really well on the smaller time frames, especially like a 4 hour or 1 hour, to kind of like identify some short term pullbacks. Like for one example, like we had one on Ethereum earlier today, right before we started pulling back a bit. And then you also have, bullish divergences as well, which are essentially, I was trying to find one real quick. Pretty much what we had right here in July, right? So you had basically Bitcoin trending lower, right? You had making lower lows right here, while the RSI was making a higher low, right, on a major time frame here. So that indicates, once again, underlying strength in the market. You're probably going to see a reversal. Might not happen today, tomorrow, but it's on the way. And then obviously that's what we get, right? So pretty useful indicator. Like it's semi lagging, I guess you could say, and it's not like indicative of like right now, like like I said, the price act, it's pointing to the downside, so it's not like it's just going to continue straight down. There's many other things you can put in, but one key thing is when you're starting to move higher, it's really important to kind of just check around and see what you look like in the short term. And with that, you can zoom in right to like the 4 hour, the 1 hours. One good example of this is what I'm going to say is, let's see what pumped today, because something that's like pumping like crazy, you don't want to chase the green candles, and especially if it's like punching into 80 and 90 on the RSI. It was SLP, my smooth love potion, right? Today I put up
that's used in Axie Infinity.
Yeah. It is right. So it's a metaverse project now. So this I put this up earlier, right? We had this massive move. This was like this is a 4 hour time frame. So this is 4, 8, 12. In 12 hours, you rallied like 100% basically. And then when you come to the RSI, you see this, and we're at once again, like when you saw this earlier, I put out this alert. This is what the chart looked like. Right. So I'm pointing out to everybody, I said, hey, this is at 86 on the RSI.
Yeah.
Way overbought. Right. It's going to cool off. And exactly, perfect example of how this is a decent way to kind of determine when to take profits, because then this came after. So this cools off. Right. The market restabilizes, restructures. You'll probably come down and test this, 21 EMA or something like that. We'll go into that maybe next week, but then you continue higher. Right. So this RSI is very powerful tool, especially just to kind of pay attention to when it's overbought or oversold. And when it's oversold, obviously you get, bounces and reversals and stuff like that. So,
okay. So RSI stands for relative strength index, and it ultimately is showing you exactly that. How strong or weak is the market? And it's basing itself off of the amount of that amount that's being bought versus the amount that's being sold.